I haven't talked about Bitcoin yet. We're 15 minutes into the show. I haven't mentioned Bitcoin yet. We're coming up, you know this, right? The 1-year anniversary of the Bitcoin ETF launch, that's in January. We'll talk about it in January. But I just want to mention iShares Bitcoin ETF, that's IBIT, I-B-I-T, is the market leader. It's amazing. We have $100 billion in Bitcoin ETFs. You have half of them, I think 48 billion. That's really quite impressive since launching. This is one of the most successful ETF launches of all time, generically, Bitcoin ETFs. Dave can talk about this. But what is going to be the main driver of Bitcoin in 2025? You don't have to be bullish or bearish, just tell me what you think is going to drive it.
I think there's a few different factors. One is what happens in the interest rate world, because we saw rates start getting cut this year. If you look at a lot of professional investors that are looking at Bitcoin as an asset class to include alongside stocks and bonds, they look at it relative to what's the income I get from Bitcoin versus something like treasuries, very different asset. As rates come down, Bitcoin can become more attractive, just like gold. What's also going to change, though, is kind of expectations around the main fundamental drivers of Bitcoin, which is what is the inflationary environment around the world, and what is the kind of geopolitical risk index around the world looking like as well. If we enter a period where inflation is stickier or there's more fragmentation around the world, that could drive more fundamental belief in Bitcoin as well.
I don't want to get into too philosophical discussion on Bitcoin, but Dave, do you think Bitcoin is meeting what was the original use case as a global monetary alternative? That's sort of, has it really met that use case? I'm sorry to be, ask an obvious question.
I think it's met the digital gold use case, in that people are using it as a digital store of value. It's not being used as a transactional system. We all know that. There are solutions for that. The level 2 solutions work. They're viable. What we've seen, though, is the institutionalization of Bitcoin as its own asset that is unique and disparate from crypto. So Bitcoin by itself is not Ethereum and Solana or any of these other things. Bitcoin is unique. As such, I think what we're going to see in 2025 is the dynamic of Bitcoin, what it's worth, how it's trading, how volatile it is going to actually start being driven by exchange-traded products and less by on-chain people trading crypto. We've already seen that. The volumes in IBIT are phenomenal. I don't know what they are off the top of my head, but I would not be surprised if there are days in which the complex of Bitcoin ETFs trades more notional than trades on-chain directly. The volumes are insane, and because of that, you have to expect more price discovery is going to move this.
You're talking about the volumes now, not assets under management.
I'm talking about the volumes, just the amount trading. With the options running, I'd love to hear your thoughts on that. With the options on IBIT now trading, that cracks open the asset class to all sorts of investment strategies that were basically impossible.
Has volumes
before.
increased? By the way, folks, in case you don't know, options on IBIT were trading just recently, 2 weeks ago?
A couple weeks ago.
Yeah, and they were very successful. Has that led, does options trading generally lead to more trading of the underlying?
Absolutely, because people need to hedge out that delta. They need to hedge out the underlying security, right? The options dealers don't want to be long or short anything, so they're always going to be using the underlying as a way to get out or into those positions. IBIT's already extraordinarily liquid. They don't need to go to another asset class. They don't need to go on chain to get that exposure.
What have you seen with your trading in IBIT since the options? This was 2 weeks ago, the options on IBIT, the Bitcoin, their Bitcoin.
We've had a tremendous amount of volume. I think part of it is a lot of people can really customize their risk, their income, their upside potential with these options. So if you think about people who maybe have made a lot of money in Bitcoin, they want to maybe protect some of those gains. People who are holding a lot of Bitcoin and not drawing any income from it, maybe they want to sell covered calls on top of that to generate some income with that Bitcoin. So it just expands the ways that people can own this asset and have it play a role in their portfolio, which gives people a lot more customization and a lot more kind of ability to hold it in a portfolio.
But have you seen more, it seems like you would have seen more volume since the options came in, but it also corresponds with the election too. It's it gets a little complicated doing a cause and effect here, but the short answer is yes, we've seen more volume. I'm asking.
We've seen volume, we've seen volumes increase, we've seen inflows increase, but you're right, there's multiple factors at play here, whether it's the volatility in the price, whether it's the regulatory environment, whether it's the options, all of these things have kind of coincided.
And not to be cynical or weird, but how did you get half the volume? We got $100 billion in assets under management in Bitcoin ETFs. That's a lot. That's a very successful launch. I don't know if it's the most successful in history, but BlackRock has, I think, 48 billion, half of that. There's 8 or 9 Bitcoin ETFs out there. And they're all essentially the same product. You're owning Bitcoin. Go ahead and tout yourself a little bit. How did you get half the product?
We see consistency across all different client types that they are looking for quality behind this product. They want to go with a brand that they trust is going to deliver the price returns of Bitcoin, and being able to invest in a BlackRock product by trading in an exchange, holding it in your brokerage account next to your stocks and bonds, just makes quality very accessible with IBIT.
You know, it reminds me of Schwab. Remember when Schwab entered the ETF business? They had these plain vanilla nothing ETFs, and everybody said, nobody's going to, there's nothing new here. And yet they powered themselves right in because they had the pipelines, the distribution network for people to instantly pick it up. Is that a factor here?
I think
I'm trying to figure out why.
Brand really matters. I think brand matters even more when you're in a new asset class or a new area of doing something. You know, whether you love or hate BlackRock, one thing you can say from this, they tend to stick by their products. They don't shut down half their product line every week or two. They're willing to put a product on the menu and say, no, we're committed to this. This is how investors should think about an asset class. I think that's part of the reason for it, is the brand from iShares is, you're the ETF folks, you've been there from the beginning. I think that's hard to compete against.
Okay, we're going to have to leave it there, folks. The one-year anniversary of the Bitcoin ETFs coming up in the middle of January. We'll be there. We'll talk about that and see what else we can bring you for 2025. It's been an absolutely amazing year. We got more ETF Edge coming up, but this is a one for the record books, folks. And we'll talk more about that on the show coming up, our podcast.